Hello and welcome to Long Investor. So in this video, I'm doing a market update of where I think the market is heading for the next couple of weeks or so. So last time that I did a market update was on February 21st, and there are a few things that happened between then and now, especially the Russian-Ukraine conflict that started on February 24th, so just a few days after I have posted the video. So towards the end of the video, I was saying that if Russian and Ukraine conflict escalate, we may see a quick dip in the S&P 500, but it would be a forced breakdown that the market would recover right after, which seems to be the case at the moment. We have the head and shoulder pattern, and then during the conflict, we have a breakdown, and then we have some sort of recovery, and then we are above the support line. And I've also explained in these two videos where I believe there is another bull run before a recession comes. So now let's take a look at some of the new data that came out and see if my point is still valid. And the sector that I believe will have a great one in the next couple of weeks or is currently underweight is the tech sector. So we're looking at the Nasdaq. So before we go into the technical analysis, let's look at some data first. So here we have the fund manager cash level. Historically, if the cash level is above 5%, that should be the signal for a market bottom because the fund will be putting the cash to buying at the bottom, which will later on turn into a market rally. So in February, they have 5.3%. And then in March, they have up to 5.9%. And right now, our current level, the spike is very compatible with these spike in these past days. And in just a minute, I'm going to show you what this day looks like in the stock market. So right now, we know that the fund has a lot of cash on hand. So here with another data is the FMS investor positioning. So where they rate their position in different months. So one thing to notice is that they have been selling tag since December. So in December, they have around maybe minus 9 point of tag. And then in January it's almost minus 21, and then in February it's less than minus 10. So they have been selling less tag lately. So if you look at the Nasdaq, so since December there's a sell off for tag. So in December, January, and February. So the data just say February. They don't tell you which day. So I could imagine they're selling it along the support line. And the thing is, with fund money, I would consider that as in a smart money because they are managing a fund. It's the people that I believe they know what they're doing. So after all this sell off in tech, they might use the cash to buy the tech back since it has dropped quite a lot since in December period. So now let's back to my point. Let's put these days into context. So I drew a line on every single of those days. As almost every single one of them, it corresponds to some sort of a market bottom, and we can have a up to 100% rally in here. There's 150% here. Every single one of them here is over 100. It's almost 100%. So here 110%, 110%. Okay, you may have quickly noticed that we have two lines at the some sort of a bear market at in this area. But if you zoom in at the day chart, so here we have the day chart. So it's in July 2000 and in March 2001. It doesn't say which day, so I just picked somewhere in July around this period. So even though it was in a bear market, you can still get a 20% rally in the Nasdaq. And in here you have a small dip, but eventually you rally back to a 24-25% to the top. So statistically speaking, you have 1, 2, 3, 4, 5 out of 7 times that you have a 100% return afterward, and then you have 2 to the 7 chance that you have a 20% return. Either way, the risk reward ratio is pretty decent at the moment. And another data here, that is the Nasdaq market breadth. So it's the percentage of stocks in the Nasdaq that is trading above the 200 days moving average. Although we are not at the level as the COVID at the moment, but every time when it gets to this low, you put back the Nasdaq on top, you can pretty much see in every spike down, it is very close to a market bottom that follows by a long rally afterward. And the last thing to look at is the 10-year bond yield. So traditionally, people see an inverse relationship between the 10-year bond yield and tech. So when bond yield comes down, tech goes up, and when bond yield goes up, tech goes down. And in here we see a strong rally of bond yield since August 2020. So if bond yield continues to go up, why am I expecting tech to go up? It is because when you have a significant market bottom, bond yield and tech tends to go up together. And then if you zoom out a little bit, you can see some period of time where they go up and down together. So they're not in an exactly inverse relationship. And then we have the raise of interest rate, which if the Fed continue to raise the interest, it might strengthen the US dollar value, which then the US bond market will seems to be attractive again, since people have been selling off the bond currently, so the bond price has been going lower. So when people buying back the bond, then the bond yield will be dropping again. So right now I have a mixed feeling between the bond yield and the tech market. So it's about a 50-50 chance over there. But if I just look at the market breadth and the fund manager cash scenario, the statistic just tells me that to buy into tech at the moment. So now we have seen the data of why I think tech will have a great one afterward. And now let's take a look at the technical picture. So Nasdaq has been forming a downtrend since December, and it just got broken on last week. We had a strong rally coming from 12.5k to all the way up to 13,000, almost 900, and we closed right around the 50 days moving average at the moment. So even though I believe there will be another bull run before recession, but then that was the data before the Russian-Ukraine conflict, and it really depends on how long that conflict continues, and that will shorten the amount of time that we have from now until the recession, because of the commodity prices will be going up, and then inflation will keep going up, and then the Federal Reserve have to be more hawkish on their rise of interest rates, which will turn the table faster. But having said that, as you can see, even if we're in a bear market, so we still have 2 out of 7 chances that we might see a 20% one from a bottom. So if we assume this is the bottom, and about 20% of it is, we'll put it in 15,000 area. So it'll be very close to this resistance line here. As you can see, there are a few toppings, there are a few support that show around this line. But in the short term, I don't think it's a good time to enter right now. Although we have broken the downtrend, but we also had a 10% rally on the Nasdaq in last week, and we're at 50 days moving average, and we're very close to one of the strong resistance around the 14,200 area. These 3 support line I have drew it since last year in March area, when Nasdaq was trading between these 2 price channel, and we can see in this year they also act as a pretty strong support, especially this support line. I would call this the last line of defense for Nasdaq. So if we miss entering the bottom in here, and there is still the uncertainty issue from Russia-Ukraine, I believe that it will most likely to get rejected by the resistance over here, and we might possibly see a retest of either this or this support line again. Even in last year during the December rally, we have a few tests of the support line and resistance before we have a breakout. And if somehow Russia and Ukraine resolve their conflict by next week, then we will see a breakout of the resistance. So before the conflict resolve, I think we're most likely to see a trading range between these 2 levels until maybe in April or May area, when the inflation rate comes down a little bit and the Fed can be more diverged on their rate height. So that could trigger the rally that I was looking for. So it could be a good chance to buy the dip if it backtacks the support line or even the one after. And if you are pushing the resistance next time, it might be a good idea to buy some hedge, maybe SQQQ, just so that if it comes back down, you're getting money. If it goes up, your original investment will be still making money anyways. So maybe just a small amount of SQQQ when it reaches the resistance. So this is it for this video, and I'll see you guys next time.